Well, hello and welcome to this Money Control live stream. You're watching Morning Trade with me, Nandita Khemka. It's a brand new day and a lot of cues to watch out for today. Of course, let's start with the GIFT Nifty indicating a flattish start for the Indian markets. Remember, we are at record levels and we'll have to see whether or not we maintain the momentum in today's session. Of course, lots of stocks to watch out for. LTI Mindtree, HDFC Bank as to what the street verdict is on the first quarter earnings, and a lot of other stocks to watch out for. And of course, if you have any stock-related queries, send them in to us on our YouTube feed and we will have them addressed by our expert on the show. But before we do all that, as usual, let's take a look at the top stories at this hour. Dow rallies for the sixth straight day to close at its highest level in 2023. The Nasdaq and S&P 500 also edge up ahead of big bank earnings from JP Morgan and Morgan Stanley. Asian markets trade mixed, while the GIFT Nifty, as I said, is indicating a muted start for the Indian market. LTI Mindtree's deal wins remain strong in Q1 while margin expands for the second quarter, although revenue growth slightly misses estimates. In key earnings to watch out for, Q1 numbers from IndusInd Bank is awaited. Profit likely to grow over 30%, asset quality too expected to improve. Watch out for the MFI book as seasonality may play spoil sport here. And among stocks to watch out for, Money Control exclusive confirmed. Sheila firm's board approves the acquisition of Kurlon and 35% stake buy in furniture provider Furlenco. While sources say Swedish battery maker Clarios is likely to completely exit its 14% stake in Amara Raja batteries via a block deal. Of course, also watch out for Infosys as it has inked an AI deal from an existing client worth $2 billion. We'll be talking about all that on the show. Let me first welcome our technical expert for today, Sacchitanand Sacchitanand Uttekar from Tradebulls Securities joining in this morning. Good morning, Sacchitanand. Record high levels, 19,700 already on the charts, but looks like 20,000 on cards this month itself. What's your own view on that?
Good morning, Nandita. Nandita, I think the pattern itself is indicating this particular target of 20,140. And if you look at the daily structure, it's a clear-cut continuation pattern, which is namely called as flag formation. Now, if you look at the overbought reading of all the all its relative indicators, they are still not showing any signs of divergence or loss in momentum, which basically is indicating that there is a good amount of optimism in the market. If you look at last two trading sessions, once the Nifty breakout from 19,500 cluster, it has been maintaining its tail above its 5-day exponential moving average very well. So even right now, I think 19,530, if in case the Nifty slips below this particular level, then probably we may see some loss in momentum. But as of now, the trend structure is very strong. We have this pattern target, which is resting at somewhere close to around 20,140. So we expect this particular momentum to continue throughout this week. For the week, we may see a swing towards 19,900, but eventually we see this particular pattern target of 20,140 to be achieved.
All right, that's the level to watch out for on the index. Sacchitanand, stay on with us. We'll be coming to you and discussing specific stocks. But let me also welcome on the show Vivek Mashrani, who's CFA and founder of Techno Fund Investing, joining in this morning. Good morning, Vivek. Good to have you on the show. I want to start by asking you about LTI Mindtree. Numbers have been fairly muted. Margins have grown for a second quarter, but revenues have been flat. Commentary coming in has been pretty cautious. There has been a scale back in client spends. In light of all this, do you expect double-digit growth and, the kind of margin guidance that they've given, 17 to 18% exit margin for the current fiscal? Do you think this is a tall task to achieve for LTI Mindtree?
Yeah, I think the context here is, the merger recently, which they did, last year. And generally, in my experience, what happens is when there is this kind of big merger, it's very difficult to have the cultural integration, having the cross-selling opportunities and all the synergies to emerge. It takes like anywhere between 1.5 years to materialize that. And if you see even the commentary, I think they are putting that in FY24, they might see all these cross-selling and emerging synergies that are coming through the merger. So I think rather than playing LTIM, I think a broader IT basket is turning around and there are a lot of opportunities out there. I don't see a very good growth, at least in this year. It will be broadly muted. Even if they achieve like 16-17% kind of growth, it will be like a lot of push they need to do. And the client additions, if you see last quarter, they've done some 33 clients or so, which is slightly, okay, but not so well in terms of how they should be doing aggressively after the merger. So I think, broadly, it is going to be a muted company overall in terms of revenue and profitability growth in next couple of quarters. FY24 is where we might probably see some sparks and some synergies kicking in. So that is how I see LTIM as an opportunity.
All right. You know what, if you look at the brokerage verdict, they have cut earnings estimates, but no big downgrades coming in. In fact, for the entire IT pack as well, do you think the street was already expecting 2 to 3 quarters of weakness amid, the global macro environment? Do you think that much of it is already in the price? And, of course, we have seen the IT index staging a very smart uptick. In fact, yesterday it was at a 52-week high as well. So, all these stocks, do you think all the gloom is already in the price and we can expect stocks to edge higher from here on?
Yeah, absolutely. I think, market is a discounting machine, and before the earnings will start coming in, you will see that uptick already getting started. So even for LTIM, you might expect that before FY24, probably in the last quarter this year, you might see some spike already coming in. And overall IT pack also, I think it is moving up in a nice way. And even if you see Nasdaq 100, it is almost like touching 15,000 plus. So it's having very good correlation with Nasdaq also, where it seems like, the recession worries are over and they are probably moving towards the positive side. So definitely, yes, you are totally right. Probably we might consolidate for a few quarters in some of these companies where the earnings are not coming. But broadly, I think the turnaround has overall started in the sector.
One question about Infosys. This morning, of course, there is a news flow that the company has inked an AI deal with an existing client for 5 years worth over $2 billion. And of course, on Thursday, it is slated to report earnings. It has signed another deal with Nordic, in fact, Nordic Bank, if I'm not mistaken. Do you think that Infosys can better its peers in terms of earnings? And what do you expect in terms of guidance? Right now, the revenue guidance is 4 to 7%. Do you expect the company to tighten its guidance further? And do you expect the, book-to-bill conversion rate to be strong for Infosys going forward?
Yeah, I think Infosys is a giant elephant. It's very difficult to move this elephant with a couple of orders. Of course, directionally, they are going on the right track, and having these kind of orders already, strengthens the view that, they are moving in the right direction. But having said that, there are so many such clients with so many big orders like this. It is directionally on the right side, but to move the needle, from 4 to 7% guidance to somewhere around, say, 7 to 10%, they need a lot of room in terms of growth and client addition and a lot of orders to bag in. So yes, directionally it is good, but I don't think, it will make a massive move in terms of their financials or the stock price as such.
All right. I think, my last question to you would be about Route Mobile. Of course, promoters will be exiting a stake by selling over 56% stake to Proximus for somewhere around 5,900 crore rupees or thereabouts. And thereafter, there will be a open offer for 26% stake. In all this, of course, we saw wild swings on the share prices yesterday. But do you think the minority shareholders stand to benefit from this, or is this a negative for them?
See, I think broadly it is negative. If you see from the long-term perspective, generally we prefer companies which has skin in the game. Promoters are there and they are basically fully focused in executing different things and strategies inside the company. Now, having entire promoter stake getting sold and somebody like a private equity firm getting in, one, it is signaling probably it might take it private, and maybe it might delist also. That is one possibility. In that case, regular delisting rules will apply, and having seen the share price, what it has been in last 1 to 2 years, probably, the upside might not be that much. And even in terms of if it is staying listed, there might be some small opportunity for minority investors. But many times what happens is these kind of moves are not really good in terms of directionally, if you see in terms of minority shareholders. If they again have some kind of corporate governance issues, and if they don't execute this open offer well, you might not see a good pricing also coming in. Although, it is governed by a lot of regulations, but still, there are ways to play around it. And there is also, of course, voting that is going to happen from minority shareholders. So I would say from people who are not understanding special situations, they should probably stay out and see how things are settling out, and probably 1 year after what is happening, they should focus on that rather than just getting into the open offer part. That is what is my view, because these are very tricky and it's very dynamic. There will be a lot of fluctuations and volatility during the period.
All right, that's the view on Route Mobile. Then wait it out for the next 1 year and like the street digest this bit of news flow. Well, with that, thanks a lot for joining in this morning, Vivek. Great having you on the show.
Thank you so much.
Well, let's go back to Sacchitanand and talk about specific stocks. This morning, of course, brokerages have come out with their reports on HDFC Bank after a steady set of numbers, 30% growth on the top line, and of course, asset quality steady. So, a good quarter for HDFC Bank, given the fact that it was its first earnings after the merger. And the stock, of course, ended at the high point of the day. If you look at Citi, it has a buy rating with a target price of 2,200 or thereabouts. It expects the return on assets to hold near that 1.92% mark post the merger. JP Morgan also has an overweight rating with the target price of 2,000 rupees. HSBC, it has a buy rating, target raised to 2010. And it expects bank to meet deliverables via cross-sell and ramp up of operations. In fact, the ROA estimate here also is 1.92% on a merged basis. It also believes that the standalone bank valuations look pretty attractive at 2.2 times FY25 book value. And going forward, Morgan Stanley also has an overweight rating. Now, Sacchitanand, the numbers have been fairly good. Street has digested it pretty well. And it did end near the high point of the day. Approaching 52-week highs, would you expect more upside going forward now that the earnings are out of the way?
Yes, Nandita, I think the chart structure is very confident. In fact, the floor which has been set at around 1600, 1620, I think this particular floor will stay for this for next couple of months. We are expecting an eventual price move towards 1825 going forward. So this is a good time wherein the stock can be accumulated in one's portfolio. Keeping a stop loss somewhere close to around 1620 on a weekly closing basis, the stock can be accumulated. From a trading perspective, we may see an immediate swing towards 1700, 1740, but eventually I think this particular move should extend forward. If you look at the weekly setup, especially if you look at the weekly ADX, it is about to break that 25 mark. And once that particular level has been breached, we may see much stronger flows coming in this particular counter. So one should stay invested. On every opportunity, the stock can be accumulated. Keep a stop loss at 1620 on a weekly closing basis for an eventual target of around 1825.
All right, 1825 target for HDFC Bank. Let's also talk about stock of the day, Reliance Industries, given the fact that Jio Financial Services will be included on the Nifty 50 effective 20th of June. In fact, the demerged arm, of course, financial services arm of RIL will, of course, be renamed as Jio Financial, as we know. It will also be included in 18 other NSE indices, including Nifty 100, Nifty 200, Nifty 500 and the likes. But the NSE and BSE will also have a special pre-open session for RIL on the same day, on 20th of July. Looking at the charts, I think it has started participating in the rally. In fact, stock did hit a fresh 52-week high yesterday. I think it's just about 2% away from its all-time highs. Higher highs on the charts, Sacchitanand?
Absolutely, Nandita. I think it's a clear-cut continuation pattern, continuation trend, which is still indicating further up move towards 2930. The base at 2600 seems now elevated towards 2700. And if you look at the option writing on the call side, it has been very confident at 2800. So in case if this particular hurdle is crossed in the first half an hour of the day, we may see a very strong short covering move getting unfolded. So pattern target is clearly set at around 2930. One can keep a stop loss on a closing basis somewhere close to around 2740, and still prefer adding more aggressive long positions.
All right, that's the view on Reliance Industries. Then let's talk about Sheila Foam. Stock shot up yesterday somewhere around 6% or thereabouts. A money control exclusive has been confirmed that the company will be buying out its rival Kurlons for something around 2,150 crore rupees, and in fact it will also be buying a 35% stake in furniture provider for Lenco. How are you viewing this stock on the charts, given the fact that yesterday we saw a very strong up move, but over the last 5 days or a month for that matter, it hasn't really done much?
Nandita, the major trend for the stock remains weak, but if you look at last, a couple of weeks, it has been sustaining well above its 200 weekly exponential moving average, which is placed at around 1130-35. So the moment it starts sustaining above this 1250 mark, which it registered yesterday, we may see some follow through action here. Definitely, the base looks confident at 1130, so probably one can keep their stop losses there, and we may see a reversal in trend, shaping out soon. So it needs a confident closing about this 1250 mark, and once that level is conquered, we may see a fresh bullish sequence setting in. From a price perspective, the pullback can extend towards 1500, 1560. But the floor needs to be stable. I think the stop loss should be placed at around 1130 on a closing basis.
All right, that's the view on Sheila Foam. Then let's also talk about an Amara Raja before we take up some viewer queries. Clarios will exit its complete stake in the company of 14% via a block deal today. That's according to sources. And the floor price has been set at somewhere around 651 or thereabouts. Technically, how is this stock looking on the charts, Sacchitanand?
Well, technically, it still looks like a very strong trend. We have seen a good, strong surge from the base of around 580 till 700. We have really not seen any major correction, during this particular process. But if you look at last few trading sessions, there has been a negative divergence on its RSI. So probably, it is due for a correction. I won't be surprised if the stock again falls back to that 640, 650 kind of a zone where its 200 weekly exponential support is being placed. And post that, we may see the rally again resuming. So I think it's a good, strong trend. And the strategy should be to accumulate this particular counter on a decline. So as of now, I think in case if we get a dip towards 650, 640 zone, I think that will be an ideal level to build in fresh long positions, keeping a stop loss somewhere close to around 605.
All right, 605 is a stop loss to be kept on Amara Raja. With that, let's take up some viewer queries. Then Prabhu has written in, wants to know your thoughts on IEX. He has bought the shares at 145 rupees a price. In fact, 145 rupees a share. He wants to know whether this is the right time to average it. Now, this stock has been stuck in a range, in fact, very close to its 52-week lows. Is this the right time to average it?
Well, I don't think so, because the major trend for the stock still remains weak. It has been trending below its 5-month exponential moving average as well. So clearly, this is a very strong indication that this the trend strength is not evolving, in the way it has to. So probably, one should avoid, building any fresh long positions here, and even averaging at this point of time would not be advised. We may see the stock consolidating within this particular band of 135 on the higher side to 110 on the lower side. So probably we may see it, declining further. But eventually, we don't see this particular stock, crossing 135 zone very soon. So avoid averaging. The major trend still remains weak.
All right, the major trend remains weak on IEX. Avoid averaging the stock. Hope that answers your query. Let's take up another query on UPL and Chambal Fertilizers. Then this is coming in from Chandan Kumar Thakur. Wants to know if it's the right time to buy a UPL or a Chambal. Now, UPL, of course, as we know, has been stuck in a downtrend. I think the stock has been hitting 52-week lows as well. Would you advise investors to steer clear of this one? And fertilizer as a pack has been doing well. So which one would you advise him to buy?
I think both the structures are interesting. In fact, if you look at UPL, it has been oscillating within this particular broad range of 600 on the lower side and 850 on the higher side. It has been oscillating within this particular range for almost 2 years now. And it is very close to its lower end. And we are seeing some signs of a positive divergence here getting established. So on a decline close to around 650, 640, I think it will be an ideal level wherein some trading longs can be initiated. On the higher side, once the stock starts trending above 665, 670, then probably we may see a reversal getting back into the counter. But I think this is a good level wherein the stock can be accumulated. When we look at Chambal Fertilizers, it's a very similar structure. But if you look at the overall trend, the trend has been majorly on the negative side. the stock clearly needs a breakout above 280 levels to set a reversal. So given a choice, I think I would still prefer with the UPL, which is trending closer to the lower end of this broad trading range. But Trumbull, I think it's better to chase this particular counter once the breakout is set at around 280.
All right, that's the view on both the stocks. Hope that answers your query. Let's take up a query on Lemon Tree then. Dilip has written in, wants to know your views on the hotel sector, particularly Lemon Tree, and whether or not one should hold on to it for a month. And he's expecting a target of 105. If you look at the stock, I don't think there's a clear trend emerging, given the fact that over the last 5 days, it has been fairly, flattish, 2% almost, but in the last 1 month or so, it's down somewhere around 2%. So, I mean, no clear trend. But would you expect the stock to cross the 100 level over the next 1 month?
Well, looking at the price structure, clearly, as you said, for the last 8 weeks, the stock has been consolidating within this band of 90 on the lower side and 95, 98 on the higher side. So, from a price perspective, it purely says a sideways trend. And if you look at the RSI, especially on the weekly scale, it has still not reached the overbought zone. So there could be some scope of price rise even from this particular juncture, but it is better to maintain a trailing stop loss here. It has been holding itself well above its 20-week exponential moving average, which is placed somewhere close to around 88 right now. So probably you can keep a stop loss at 87 on a weekly closing basis, and await for a breakout above 97, 98 levels. Once this particular breakout has been established, then probably the target that he's looking at around 105, even that particular target may be surpassed, and we may see an eventual swing towards 112.
Right. That's the view on Lemon Tree. Hope that answers your query. But let me also take up another query on RK Forging. Sai Rathod wants to know whether it's a hold or sell. Of course, the stock has been doing extremely well, up 4% yesterday, last 5 days, nearly 10% or thereabouts. Do you expect a big breakout on the charts? It's already very close to its 52-week highs.
The weekly RSI reading of 90. So, I would rather avoid chasing breakouts here. In case if the person is holding to this particular counter, then probably it should maintain a trailing stop loss strategy. The immediate major level to track from here on would be around 445. So until unless the stock continues trending above this particular level, he can maintain his bullish stance. Though if the RSI reading is at around 90, there are no signs of any exhaustion or reversal here. But I would not advise buying or chasing a particular counter when its RSI level crosses 85. So it's better to maintain their existing long positions with a trailing stop loss mechanism.
All right. Avoid chasing, breakout stocks. That's the view from Sacchitanand. Sacchitanand, one last query. This one is coming in from Vinod. Wants to know your thoughts on Rainbow Children Hospital. Now, this stock, I think, was it's up somewhere around 10 to 11% on a monthly basis. How should one approach this? If somebody has already got a position in this stock, should they hold on to it, or is it time to book profits?
Well, yesterday's price action is not showing that much of confidence. We have a clear-cut, dark cloud cover formation. After a rally of almost 11 trading sessions, we have this particular formation right at the top. Even the RSI has given a negative crossover. So probably, it's better to, book some profits here and keep a trailing stop loss somewhere close to around 1010 for their balanced positions. The major trend still remains positive, but after a good strong rally, if you're getting a major reversal formation here, so it's better to be cautious here and take some profits off the table. On the higher side, the rally may resume once the stock starts trending above 1145 confidently. So probably we may see an extended move eventually heading towards 1230. But as of now, it's better to take some profits off and keep a trailing stop loss. Keep a trailing stop loss somewhere close to around 1000 levels for balanced long positions.
All right, that's the view on Rainbow Children's Medicare. I hope that answers your query. With that, we've come to the end of this query segment. But Sacchitanand, what are you recommending for our viewers this morning?
Two stock ideas, Nandita. First is the SBI breakout can be chased further. We have already seen a very strong price action in yesterday's trading session. It had been oscillating lower below its 600 mark. We have seen that particular level getting breached confidently, and we are expecting price target somewhere close to around 630. So we are advising building long positions here with a stop loss at around 593. The second counter on our radar has been Grasim, which we have also recommended to our clients. If you look at the overall structure, it looks like a classic triangular formation on the daily scale, which has already exhibited a fresh breakout above the 1800 level. So we are expecting a price acceleration towards 1880 eventually. That will be the positional target. From a trading perspective, a swing towards 1835 is expected. So we are advising building long positions here with a stop loss somewhere close to 1772.
All right, SBI and Grasim, of course, buy calls in the futures and options segment from Sacchitanand. With that, Sacchitanand, thanks a lot for taking out time and joining in this morning, and of course answering all of your queries as well. Well, what should one be expecting from the FMCG space in the first quarter? We'll get you a live chat on this at 11 a.m. with Mangalam, so do tune in for that. But for now, it's a goodbye from me and the entire team. Thanks a lot for watching, but stay tuned to Money Control.